Trading revolves around identifying trends. Recognizing these trends assists traders in making informed decisions on when to buy or sell. A popular method traders often resort to is using the 50 and 200 period moving averages. Although widely adopted, this method sometimes results in late trend signals, causing traders to miss out on trades or make poor timing decisions like selling at market lows and buying at market highs. But what if I told you there's a more refined method out there? A method that synergistically combines moving averages, Bollinger Bands, and a volatility estimator to filter out market noise, leading to enhanced trade executions. The indicator in question is called the G-channel trend, the original verticator to the chart. Click the indicator's search tab and search G-channel trend. This one by this user. Save it. Now add it to the chart. Diving into the indicator's settings, you'll notice its simplicity. There aren't a plethora of options to sift through. Lowering the length option can provide shorter-term trends, opening doors to scalping opportunities. For our backtest, we found 200 to be the most effective as we want longer-term trends. This adjustment helps us sidestep mixed signals in volatile market zones, a pitfall other indicators like the moving averages sometimes fall into, such as in these areas. Moving on, we will leave the source option on close. The show cross options enables and disables the trend labels. We will leave this on. Now go to the Style tab, disable the close price, and increase the brightness of the average. And that is all we need to adjust. Go ahead and click OK. By applying this indicator with these settings on our chart, we can see exactly how this indicator discern market trends effectively. When the cloud is above the price and is red, this indicates there is strong selling momentum and we are in a bearish market. Conversely, when below price and it is green, this indicates there is buying momentum and we are in a bullish market. Using the indicator in its most basic form, we can see we have these buy and sell labels. Pairing the indicator alongside your analysis, you can use this indicator to find reversal or trend signals. Buying when the label prints buy and selling when the label prints sell and holding until the opposing signal is printed. Another method of effectively using this indicator is to add another one with adjusted settings to create an entry zone. If we go ahead and add another instance of the indicator to the chart, then under inputs, we change the length to 100. Next, disable the show cross option. Then go to the Style tab and disable average and close price and change the background plots to another color. Now we can see that by combining these two indicators we now have these zones allowing us to get even better entries based on a healthy amount of retracement. This is due to the fact that the 200 length G channel is being used to determine the outer extremities of the long-term trend and the 100 length G channel is being used to determine the extremities of the inner trend, creating this inner pocket for execution. Here we can see we have a great setup for a sell position. We can see that the long-term market trend is bearish based on this outer line, and we can also see that the inner line is bearish, so we have this pocket for execution. And now that price is inside this region where we would like to seek an entry, we can execute a sell anticipating price to continue to fall. To preserve our balance, we will use a stop loss and keep stops a little above this outer trend line. If price reaches this level, it is likely to reverse. Then we will target a 1.5 risk to reward ratio. And as you see, this would result in a winning trade. Now, for a buy example. At this point, we can see the market is in an uptrend indicated by the outer trend and inner line being bullish. Price has now returned to the execution pocket. We will now wait for price to show signs of bullish reaction. Then we will set stops below the level and target a 1.5 risk to reward ratio. And let's see how the trade plays out. The third way of using this indicator is to find areas of liquidity and attempt to execute super precise entries. Here is an example. Here we can see that the market trend has previously shifted from bullish to bearish. If you look at this level, we can see that this level on the indicator was maintaining strongly. We will draw a line across from this level. Now we can place a pending order at that level, and if price returns to that level we can execute a sell and target the most recent swing low. From this high, we can see that this is the recent swing low, so we will draw a line across from here as well. For buys, it is the opposite. Price shifted from bearish to bullish, and we can see that the previous level was maintaining strongly. We will highlight that region. Also highlight the swing high. Create a pending order at the level and target the recent swing high. Go to the Indicator tab and search a useful MA, this one by Alex Grover. Click twice to add two of them to the chart. Go into the settings of the first one and set the length to 200 and then go to the other and set the length to 100. Next, go into the G channel indicator and ensure that the length is still set to 200. Great. The new indicators added to the chart will be used to serve as a way to filter out bad signals. We will be using the combination of these indicators to catch trend changes at the earliest point before all the indicators have shifted. If the 100 useful MA is above the 200, indicating a bullish market, we will only take bearish signals from the G channel indicator. And if the 100 useful MA is below the 200, we will only take bullish signals. Given that the G channel indicator does not print many signals, and when it does print a signal it holds the trade for very long, this will allow us to catch extremely large moves in the market. Here is an example. We are currently analyzing the GBP/USD on the 1-hour time frame. As you can see, the market was previously in a downtrend based on the useful MA. Since we are already in a downtrend, we will ignore any sell signals since we are trying to catch the start of the reversal. Now we can see we received a buy signal in the downtrend. This is exactly what we are looking for. We can also mark this recent level of consolidation based on this crossing point to tighten stops once price get to this level, as it could reject. We can execute buys. Keep stops below this recent swing low. The 100 period useful MA can be used as a trailing stop for entries. So once this trade is running and gets to this consolidation level, I can move stops to break even, but beyond this point I can trail my stops using the 100 useful MA. Let's look at an example of a sell trade. Here we can see price is in an uptrend. We want to wait for a sell signal and ignore any buy signals that might occur. Once we get a sell signal, we want to mark a recent swing low of the market that had a decent amount of consolidation. Set stops above the swing high and allow the trade to run while trailing stops with the 100 useful MA. It is also worth mentioning that there will be situations such as this where you're seeking a trade and there are several entries. For each setup I would recommend only attempting a maximum of 3. If you are still having issues after 3, you might want to wait for a more clear setup. Also, while trailing using the useful MA, this will sometimes result in you getting stopped out of positions prematurely due to the responsiveness of the indicator. This aspect of the strategy is subjective and you can try to use other indicators to trail your entries. We like to use the Luxalgo Neo Cloud feature in more volatile markets. The difference here is that whereas the useful MA would cause us to get stopped out in this situation due to its tightening on price, the Neo Cloud does not have this issue, as we will use the outer bounds to trail our entries. The Neo Cloud trends in a step format, so as long as it is still trending in our direction we do not need to worry about increased volatility causing a spike that touches the trailing feature. We hope you enjoyed this video on the G channel indicator and how it can be used to improve your trading. Don't forget that no matter how good an indicator might seem, they are not magic and should always be used alongside your analysis in order to truly maximize on your profits in the markets.